The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, and thank you for being with me today. Wow, Todd, you're right on it, mate. Sound is good. He knew what I was going to say. And you, Dean, up in that cold country of Canada, I'm going to talk about you in a minute. Only minus 14 degrees here. You're kidding. Downright balmy. Oh, Lord. Alan, great to have you with us as well. And Mac, lovely to see you with us, Mac. I hope you're feeling really great, mate. Last round, last sound after ladies. And Hank, you've got beautiful weather down there, right? That's grand. So have we. And I can tell you that you're pretty lucky to be getting this webinar today. The powers that be, aka the federal government in Australia, obviously, at least the Labor Party had never heard of Ronald Reagan's famous expression, Hank's lost sound. You should have sound all right. Hank, I've got it here. Everyone else got sound okay? No systemic problems? Just type in the question box for me, folks, if you can hear me all right. Yeah, thank you, Norbert, of course, and Alan, yeah, great. John, Keith, you too, wonderful, thank you. Hank's got a sound problem down there. We're recording this anyway, Hank, so you'll be able to, thank you, Mac, you'll be able to talk about this. You'll be able to watch it afterwards if that sound doesn't come back. Anyway, what I was saying is the Australian federal government obviously has never heard Reagan's wonderful expression. The most dangerous 9 words in the English language are, we're from the government and we're here to help you. Well, some years ago when the Labor Party, that's the Democrats, if you like, equivalent in Australia, was in power federally, they had a brainstorm. They decided what they needed is a new internet provision, a new internet service, entirely new, costing billions and billions of dollars, despite the fact that the vast majority of us had very, very good internet from 2 or 3 internet providers. But nonetheless, the government went ahead with their great idea. It's cost a fortune. And then they put a nice clause in saying, once the NBN, which stands for National Broadcasting Network, once that's in your area, you must, not may, not think about it, you must connect to the NBN and disconnect from whatever service you've been using. Well, fortunately, mine was very late getting here because we're really on the fringe of the city. By the time I got it, I thought they've had about 6 years to sort this out. It must be okay. And of course, it's not. And the minute it rains, good on you, Hank, you got sound back. The minute it rains here, not a lot of rain, the internet dies. So I've been spent the week with technicians crawling all over the place and gradually working through it. And we've got a nice dry day today, which is why you can hear me all right. But there we are. So now, wonderful to have you here. Okay, so today we are going to talk about the very serious business of making money. And for those of you who get a bit bored with my webinars or tired from you think there's a bit of repetition, please don't leave. This is a very, very important webinar because it's great fun to talk about all sorts of things. Stand by. It's great fun to talk about all sorts of things in markets, most of which, well, to me, it's all very, very interesting. But I suspect that very few of you are making the money you should be making. Now, we've got Dean S. with us today. He's a farmer, lives up in Canada, and he's a good example of perseverance. Dean actually came to a tutorial that I held in the States. I can't remember which particular one you were at, Dean, but I suspect it might have been in California. In any event, you traveled a long way and you came to a tutorial, and you got the benefit of that, which of course was nothing like as good as it is now, because we didn't then understand trading time signals. But nonetheless, Dean came back to me again in 2019, maybe late 2019, early 2020, to do another tutorial. So the guy's paid me $15,000 in tutorial fees. Some commitment, isn't it? And he's done the work. Not everyone does, but this guy's done the work. How's he going? Well, he won't tell me at the moment, but here he is, Colorado Springs. Okay, there we are, Dean. I'm sorry the memory's not quite as good as it used to be, perhaps. So this guy's done the work, made the commitment, been determined to get on top of his trading. And I can tell you that in August, he doubled his account, 100% on your account. That's, several 100% on margin. In September, he made 80% on his account. He wrote to me last week and said, I'm going great, and I'm not going to tell you what my returns are because it sounds like boasting. So there you are. That's the capacity. If you get this thing right, most of this, or a whole lot of it, I hope you can learn from the webinars and from various articles I've written over the years, but there is no substitute for doing a tutorial. And they're the results Dean's getting. Some of his contemporaries aren't. What's the difference? Well, some of it has to do with market selection. That's a very big point. But the point is, if you want to have those sorts of returns, you should come to a Daniel Code tutorial. Now, I'm getting older, folks. I don't admit it myself. I feel very young. I'd like to say I look just as young as I used to, but Mrs. Needham says that's simply not true. But get it while you can. And here we are. So let's move on a bit, and let's have a look, because we've got a ton of stuff to talk about today. And I do urge you, if you're starting to get a bit weary of it all, try and stay. There's some really important stuff in today's webinar on the business of making money, which is what we're here for. So we know markets are rational, orderly, and sometimes predictable. And here I'm talking about futures markets. I can't say the same about the other types of trading you can do, but the Daniel Code trading programs make money. Sometimes they make a lot of money. And recently there's been a lot of coverage on meme stocks and forced short covering. And those of you who follow trading news at all will be aware of this. And what it's about essentially is a new trading platform called Robinhood. And the idea of Robinhood, as you know, if those of you who haven't read the story, is stealing from the rich to give to the poor. Well, Robinhood's the exact opposite. It's stealing from the poor to give to the rich. And how it does that is it did pioneer this system of no commission trading, no commission trading stocks. And you say, okay, well, they must be making their money somewhere. Well, of course they are. And what they're doing is they're taking their clients' orders and they're selling them. And one of the people, their main people they sell it to, is a company called Citadel, which is probably the biggest in this business at all levels. And Citadel's rationale is that this creates a more orderly market, and you get a slightly better fill. Like we're talking about pennies, less than pennies, parts of pennies. And frankly, I am absolutely amazed that the SEC have allowed this to happen. But it's become very, very popular. In fact, most of the big platforms in stocks have had to copy them. So one of the things that's been in the news a lot lately, and you may have read it, is what's been happening with short covering and a stock called GameStop. And it's a relatively small company that has games, video games. I've never played them, but I know a lot of people do. Basically what happened probably a month ago, maybe 6 weeks ago, was that this particular company had massive short interest. Was reported 140% of short interest. Well, of course, you can't have 140% of short interest. And people who write these things don't always seem to understand what they're doing, because you can't be more than short 100% of the company's stock. That's obvious. But in fact, what happens is that you have hypothecation, or one person who's got a short position on-sells it to another and to another. So a lot of these things are multiple counted, and the release of information about short positions is pretty limited. But nonetheless, if you can start a ramp up in a company that's got a big short position, the players who are short will have to buy those stocks back to cover their short positions. One of the major hedge funds had to be bailed out over exactly this, and plenty more that haven't hit the publicity about it. That's what happened recently. As there was sort of a rush on Reddit between all the sort of social media folks, that's at least how it's presented. I suspect there are more than a few major players in there. But interesting, and I just want to show you this because some of you have read about this stuff. One of the main private players, I think they call himself Roaring Kitty, he's actually been on about a 2 to 3 year play in this company. And he made serious money. He made a lot of money. It's been well publicized. He did very, very well, and I'm thrilled for him. But think of the math. Here we are. Trading stocks and options. The player in question, Roaring Kitty, he owned 50,000 GameStop shares. If he'd bought them at around $40 a share, the initial cost was around $2 million. Think about just one dramatic Daniel Code trade in the S&P E-mini from February 2000. 3 entries into the market, of which we gave you all of them, made 45,000 or thereabouts. The total move was worth 62,000 per one contract. We made $45,000 of that. So to match the level of investment that Roaring Kitty had in GameStop, that gives you 165 S&P E-mini contracts. So a net gain on an equivalent futures basis for that big move down in February last year would have been about $7.5 million. So this GameStop play that had so much publicity is a once-in-a-decade proposition. In fact, it's on again now, and it's having a similar but more muted effect because the short interest in that company is down from 140% to about 40%. And that's a once, maybe in a decade, maybe once in a lifetime move. But we have the Daniel Code to trade every day of every year. And do we get those big runs? Yes, several times a year we get these massive runs that make a ton of money. And if you know the Daniel Code and you're trading it, you get that money. Now, that's only part of what happened in this whole thing. In fact, he started off with 50,000 shares. He's still got 50,000 shares, and he's got $33 million in the account. A whole lot of this was done with options. Sometimes I'm asked, why don't we use the Daniel Code to trade options? Well, first of all, options are systemically mispriced. The other point is, if you want to trade options, you've got to have a bias. You've got to have a mindset. You've got to believe the market's either going up or going down, or you can use a straddle and bias the trades each way. But the whole point of trading, the way we do it, and the way I teach you, is we never have an opinion about markets, because the belief that I have with the Daniel Code, which is entirely different and unique to any other form of trading, is that all the information that's on the chart will tell you, it won't tell you the next move, but it'll tell you what's the signal you should place to optimize on the probabilities? And that's been happening for years and years and years. And it's sort of a variant of the efficient hypothesis theme that states that everything, any important information in the market is known very quickly. Market assimilate news very, very quickly. So that's only part of what happened, but you get the idea. But so with options, you have to have that bias. And the other part of options is you can't always get set with if you're trading futures, you can always get a price. You may get a little bit of slippage, but you can always get in and you can always get out. And what happened with this particular company is eventually when the shares had ramped up to $330 odd, the price of options was $300 and something. In other words, the price of the option was about equal to the 100% of the cost, 100% of the then value. So there's lots of reasons that options are limited, and there's lots of reasons why you should really, if you want to make money on a regular basis in the market, you should learn the Daniel Code. And as I say, you can learn that from these webinars, from articles I've written, from the comments I put in the web page all the time. And most of all, if you stick at it like Dean did, you'll get it, you'll be rewarded. But it does require some application and perseverance. It's not easy. It's not, here's a picture, you just have to click here or click there. You have to do some work, but doing the work gets very, very easy if you're making good money on a regular basis. And we've had some decent moves in markets lately, which is why I want you to stick with us on this. So let's have a look at the trading opportunities that we give you. First of all, is start with the macro, the fourth seal charts and commentaries on S&P crude oil, S&P crude oil and COMEX gold. Those are published every week. They're run by a smart young guy called Frank DB. He's a Belgian gentleman. He came to me and did a tutorial in Taupo, New Zealand, back in 2000. I say 2010. He tells me it's 2011, I think, so he'll be right. And that was the first year that I taught the principles of forecasting using Daniel Code time and price cycles. And he latched onto that. He made that his real passion. And he's got so good at it that he now runs the fourth seal for us. And he's very, very good. And if you haven't already, you should go to the Daniel Code website, www.thedanielcode.com. Click on the articles tab, and there are 2 articles in there written by Frank. And they're simply called 2020, and the most recent one is 2021. And in those articles he gives you, they were written respectively in December 2019 and December 2020, before the year started. And he gives you the long-term outlook that the fourth seal is showing now. And then the weekly commentary will tell us if that particular pattern that we think the market's following is continuing or is changing. So it's vital, if you're interested in big time turns, major cycle time turns, you read those articles and get yourself subscribed to whichever of those markets interests you. But 2020, here's the short version, not to spoil the fun. In December 2019, Frank's commentary said, don't see any problems in 2020. Well, that was pretty gutsy, because you can remember what happened in February, March. We had a down move worth $62,000 in the S&P E-mini per one contract. And right during that period, Frank was doing his weekly commentary, and he was saying, I know it sounds ridiculous because the world, flipped to bearish and disaster scenarios immediately. He kept saying, I know this sounds ridiculous, but we think the trend is still going to continue going up. It'll make new highs later in the year, and it did. Fantastic. Well, that was a nice run in 2020, and If you'd held one S&P mini contract long for all of 2020, you made about 200 on margin. Not that for a moment do I suggest trading like that. There's far more money made by trading the shorter term swings. But the present article, called 2021, written December last year, he's saying that we see some real problems, and we do. We see some real drama in the equities this year. So, really, please, I beg of you, read the article. It's free. And if you're interested in that sort of thing, get yourself subscribed to whichever of those markets you're interested in with the fourth seal. A lot is happening. Okay. We're going to talk a lot today about the Daniel Code TO3 trade signals. These are our original trade signals. We've been running these for 13 years, and they haven't changed at all. They're still exactly the same signals that I was issuing when we started this website in December 2007. Now, the TO3 trade signals, the ones that are listed under that particular heading on the website, they are all reversal signals, and therefore they're against the apparent trend. One of the three things that are vital to your trading is being aware of the trend and being aware of it earlier than anyone else is. Now, that's not always the case, but a very high percentage of the case it is. And trades against the apparent trend have a significantly greater propensity to fail. So we use strong risk management, but trend reversals are where all strong trending moves come from. That's why they're so vital and important to us. And what I think most of you don't know, because I don't think many of you are really trading the Daniel Code to its full potential. And that worries me, because a significant number of you now over the years have done Daniel Code tutorials, and you should be aware of this. But every signal that we create for you, whether they're a TO3, TO3 plus, or a blue line signal, every signal that we create for you has a known failure point. And the DC signal failures give powerful new continuation signals. So I'm going to show you a lot of that today, and I want you to think about market correlations and failures, bearing in mind that failures under the Daniel Code are just an opportunity for a new position, some of which are very, very valuable because it tended to get the market on the wrong leg. Those of you who understand horse racing and horse riding and know what I mean by the wrong leg. Okay, so what we do, we've talked about the fourth seal. And if you want to have access to any of the fourth seal programs, the cost is $125 each. And honestly, if you're not following the fourth seal commentary, you're blindfolded. There's going to be a time in this year, not so far away, where you really, really need to at least be aware of this stuff. Now, these are all long-term charts in the fourth seal, and you'll see that Frank finishes off almost all comments by saying the daily signals will guide us. Of course, we can't trade markets off a 6-day chart or a 12-day chart or a 24-day chart, which are the basis for our forecasting of Daniel Code time and price. But it gives you an overview of what the probabilities are, and the Daniel Code daily signals will pull you into the trade at the right time if it's happening. So in addition to those markets, we have 6S, our daily trades in selected futures. We give you entries, exits, and stop-loss management. And on the Daniel Code website, if you click on our it's called, I'm not even sure. I look at this thing every day, so I should be sure. But I don't want to mislead you, so let me have a look. It's called, if you go to the Daniel Code website, here we are. This internet's working wonderfully. You need to go and look at DC Chart Navigator. That gives you, that's our members charts. It gives you these vital numbers that create turns and continuations in markets. And once you've done that, you'll see in the website that we give you under the signals TO3 signals, TO3 plus signals, 6S signals. We give you the entry number where your initial stop should go and everything else. And occasionally we also give you exits. Some of you who've been thinking about the big bar into the blue line have had some great exits that's preserved a whole lot of money. Okay, so let's move on and get to some of these things I want to talk to you about. So this is an example of what the signals look like every day. These were the signals for Thursday today. So you have blue line signals, daily buy signals, daily sell signals, inside bar buys, and inside bar sells. The blue lines are the strongest of all of our signals, and they use a combination of short-term and long-term Daniel Code studies. And the blue lines are valid for 3 days, including the day of posting. The daily buys and the daily sells and the inside bar buys and the inside bar sells, normally we expect those to be elected. In other words, we don't have an opinion about the markets. But once we have an order, we know exactly the point at which we would enter if the market goes there. And that's a huge, huge safeguard against losing trades. In addition to that, try to remember, and it's probably not clear in the Daniel Code trading manual, inside bars, that's bars, you'll see them in the Daniel Code charts there in red. That's a bar that's totally contained within the range of the previous bar or the bar before that. Inside bars, for trading purposes, we treat them as a null or a void. In other words, if you get an inside bar, simply carry forward the last valid signal that you had. So if you've got a daily buy on a Monday and it's followed by an inside bar, carry that trade forward. Take the buy at the high of the inside bar if you're a really good trader, or at the high of the last bar that was not itself an inside bar if you're new to trading. That cuts out some of the funny stuff that can go on with inside bars. So all of those orders are set out for you, and let's see what's been running these markets, because there's been a bit of excitement. What you're looking at here, folks, and most of you know this is a long-term chart of US T-bonds, 30-year bonds. And I've been showing you this chart since 2007. And you can see how extraordinarily, because we stopped that channel, the DC trading channel, we stopped that back in September, October, maybe October 16. And look at it, the markets continue to go exactly to those points at the high and the low ever since. So what's happened now, those of you who are interested in trading will have noticed that US T-bonds and other interest rate instruments have been getting a real flogging. And you have to start by thinking that a great deal of that is government policy. So where has this market gone now? Well, it's gone down to 1 standard deviation below the mean. And it's done that almost perfectly. What does it mean? It means markets are orderly and sometimes they're predictable. But that big move down in bonds, remember, the trading chart for T-bonds gives you the inverse of the yield. In other words, if the bond market on those charts is going down, that's yield going up or interest rates going up. So there's more than a bit of a frisson of muttering around that. This big move in T-bonds, which has come down from the all-time high, which incidentally was 2 standard deviations above the mean almost perfectly, to 1 standard deviation below the mean. That's a very big move. It's not the biggest move we've ever seen. You can see in the September 16 to October 18, we can see we had the same equivalent move from 2 standard deviations above the mean to 2 standard deviations below the mean. And that didn't seem to cause any great dramas in the market, but this move has. And we'll see where the how it sort of fueled markets and made them highly dynamic. This is a quick run through some of today's DC signals, and I just want you to see how dynamic these TO3 signals are, which is our very base product. This is Aussie JPY. We had a sell signal on that yesterday, and today again a daily sell signal. Not elected yet. The election point is 2 ticks. This is a forex, I should say. Forex markets are trade exactly the same as futures, except we use a 5-tick buffer above the high and below the low to elect our trades, and that's because in forex there's no central exchange. The prices in forex are largely created by the so-called supporting banks that all forex platforms have, and the prices you might get from supporting banks on the west coast of the US will likely be a bit different to the ones that you get from Central Europe, where they're using a totally different group of banks. So because we're never quite sure what is the true high and the true low, we allow a 5-tick buffer. So you add 5 ticks to the high, add 5 ticks to the true low, they become your entry points. So here was your daily sell signal for today. Does it look like it's going to be elected tomorrow? It does to me. Now, have a look at this. This is the Aussie US dollar. Now, interestingly, on this question of commodities, one of the things that's happened with the rise in apparent interest rates is that it's raised the fear of inflation. And if inflation comes back in any significant form, interest rates have got to go up. That's the relationship, and that's done enough that people are starting to be concerned about it. And that's why you've had such terrific volatility, particularly in the Aussie pairs, and that's the Australian dollar, and the loonie, that's the Canadian dollar. Now, both the Aussie dollar and the Canadian dollar are viewed as commodity markets. They're forex markets, but they're considered in a reasonable way a proxy for commodity prices. So we've seen commodity prices starting to take off in a lot of those markets. That's why you've had a good bit of volatility in the Aussie and the loonie. So there was our sell signal for today. It was elected. Here's the loonie, Canadian dollar against the chief, which is the CHF is the forex code for the Swiss franc. We had a TO3 sell for today. It's not quite elected. Want to bet it won't be elected tomorrow? I think it will. And have a look. We'll keep going with these TO3 signals. There was a TO3 buy on Wednesday for Euro Aussie dollar, and whack, up it went. So think of the correlation. Euro Aussie dollar is correlated with Aussie US dollar and Aussie Japanese yen. So if you get a signal in any one of those, the correlation is high enough. There's no correlation on quantum, but there's a very high correlation on direction. So if you get a signal in any one of them, you can use it in any other. So we had a big sell signal, in fact it was a blue line sell signal on Aussie USD, or it was a TO3 at least. I think we had a blue line earlier that failed. So Aussie down, as you've seen. Euro AUD's got to go up, hasn't it? Because there's the same currency, Aussie dollar, in both those forex pairs. Nice money if you know about it. Here's the Euro British pound, TO3 buy signal, big bar down, big run back. Look what happened with that buy today. Lovely big trade, very, very good. Here's another one. This is the British pound and the chief, the Swiss franc. TO3 sell signal elected today. Down it goes, money. Okay. GBP JPY. We had a TO3 sell signal and the trade was not elected. By that I mean that the election point was 5 ticks below Wednesday's bar. For tomorrow, the new election point, because this is a TO3 sell signal, it's valid for today and tomorrow, is 5 ticks below the true low of today's bar. 148.479 is the election point. That's where you want to get short. So we'll move on. This is Aussie US dollar, and I want to just show you the recent TO3 plus trade signals. And this one's very clear. You started off with a buy signal back in February, and that was elected on the day after the inside bar. Off it went. It went up $1,100 odd into the sell signal, and the sell signal gave you 2 days down. If you knew how to trade, you actually made money on that down move. And of course, at the same time, we got a new TO3 buy signal. Buy at the high of that bar that's got the arrow on it, and you made $1,950 odd into yesterday's close. Well, what did this market face today? It faced a TO3 blue line, a TO3 sell signal, and a blue line sell signal. What happened? Here it is. Okay, and look how incredibly accurate these charts are with the Daniel Code price ratios. Now, these are not Fibonacci numbers. They're not old highs and old lows. They're nothing you've ever seen or heard about. These are completely unique and proprietary Daniel Code price levels, and they're created by the whole matrix of the Daniel Code. Matrix, if you like. So there was your nice sell signal for today. Those of you who've done a tutorial would have been looking a bit at yesterday's bar, and you can see just where that sell signal got elected, and where it turned. The setup bar is like a handful of ticks away from that blue line at 79.73. In fact, I can tell you what it really is. Let's have a look here at my other charts, and this was Aussie USD. Here it is. Wednesday's bar, I should say, had a high. You ready for this? 79.73. Okay, look at that. Look where that high was. There was a blue line there. I'm not on the right chart. I was talking about the Aussie while I'm showing you the CAD Chief. Here's the Aussie. Look at that high on Wednesday, 79.73. Where's the blue line? 79.73. Zero variance. Does that happen all the time? No, but you will see that these charts, incredibly, follow these Daniel Code ratios very, very closely. The only variance we allow is 0.1%. Think about that. That's how accurate these things are. Pretty amazing, isn't it? And that, of course, led to the big key reversal outside day today, which was so nice. And it had a high of 80.07 against the blue line of 80.12, which is a five tick variance. That's all pretty amazing. Okay, let's keep moving here. I don't want to get bogged down with this. So that was CAD Chief, which I've shown you, we've talked about. And this is a Euro JPY. There's been this massive big bar up today. And one of the even more interesting things about the Daniel Code, most chartings and other charts other than mine, they will fail when volatility increases. One of the great things about the Daniel Code is that as volatility increases, it gets more accurate. And that's actually extraordinary. So we have created here a TO3 sell signal for tomorrow in this market. Look where this all actually happened. If you look at the high of that bar, and I'm looking at another chart where I can see it, the high of that bar is 129.977. Look at that number beside it, 129.971. 6 ticks variance in a number as big as that. Okay, it's absolutely extraordinary. And where did it close? 129.303. What's our Daniel Code number close to that? 129.296. These markets will often give you target recognition at the high and the close, either target recognition at a bar, high, low, or on the close is valid, and that's what sets up the trades. If you don't have that target recognition, you don't get a setup for a trade. It doesn't mean the next trade will be elected, but it creates the trade. And if you are a bit cynical about this, go to the Daniel Code website and click on Chart Archives. There's over 40,000 charts in there that I've created over the years since we launched this website 13 years ago. And you will be flat out finding any market that has turned anywhere except at a Daniel Code number with target recognition. So I challenge you to that. It's a lot of work, takes a lot of time, but have a quick scan through. You'll soon understand exactly what I'm talking about with the accuracy of these Daniel Code price levels. Now, this will shock you, but if you know what you're doing in trading, assuming you've learned the proper way to trade price and time, you should get better than 85 or 90% of all market moves. Okay, I'm just showing you these turns where we've created signals, but there are hidden signals everywhere in here which you should know about. This is GBP JPY, and I want to give it to you exactly. So what we had, what you're looking at is a blue line sell signal back on, I think I've got this right, yep. That was back on February the 10th. We had a blue line signal, sell signal. That's the strongest signal the market can create for us in the Daniel Code lexicon, and it failed. And failure points are opportunities. The minute this market took out the true high of the setup bar for the blue line trade, which was Wednesday, February the 10th, you knew you were wrong and you had to be long. Okay? So, seeing these markets move along, some people say, we get too many failures. What you're not thinking about is that, if you know what you're doing, failures of any of the Daniel Code signals, they're so potent that the failure of a Daniel Code signal is very, very strong evidence that you're wrong and the market's doing something else. So on that there, you got your blue line signal. It was never elected, but 2 days later, the market took off with that outside bar, key reversal bar. That's the grey one. You can see it's got the arrow on it saying sell signal fails here. And it failed 5 ticks above the setup bar for the blue line trade. Now, if you understand what I'm talking about, you should be getting 85% or more of all price movements in all markets. Now, we cover 15 Forex markets for you and about the same in futures markets. The trading is endless if you want it to be. And think about those percentages of every move over a long period of time. You should be getting about 80% or more of the total dollar value of each price movement. And I suspect that most of you aren't. But I can teach you how to do that. If you've already done a tutorial and you're not getting these sorts of results, call me. Send me an email. I'll give you a ring. We'll set up another tutorial for you. We'll go over this stuff. Some of this is new stuff that you haven't been taught before. And that's the issue for a number of you. But persevere. Be like Dean. Be stubborn. He did a tutorial. Wasn't just what he wanted. Wasn't getting the results he wanted. Do another tutorial. Now, don't worry about Roaring Kitty. We should be calling it Roaring Dean. He's making it hand over fist. I mean, you know, if you can consistently look at a big percent on your return each month, I mean, it's extraordinary how much money you make. In fact, I'm fairly conservative, as those of you who've been with us for a while know. I don't make inflammatory statements, but honestly, if you get the Daniel Code right, you should be making as much money as you want. In fact, you should be making more money than you'll be able to spend in 10 lifetimes. And it's incredible because it's so precise. There's no guessing. And there's really advanced stop-loss management to keep your risk. So when you have a failure, you don't lose a lot of money. Across almost all of these markets, if you're trading it right, the win-loss ratio is better than 2. Wins on average are 2 or more times the losses. We don't have a huge percentage win. It's not designed for that. I can give you programs that'll give you 90-92% percentage win, but they don't make the money. The money is made on these signals that I do give you, where the average win is twice, getting towards twice, plus or minus, bit less, bit more, twice the average losses, and that just makes money. And once you've got an edge, and Daniel Code is the ultimate edge, the longer you trade, the more money you make. Okay? Have a look at this. I mean, this is just a everyday Forex trade. $4,500. And if you knew what you were doing, you probably got out at the close of Wednesday's bar and locked it all in. Okay, Aussie JPY, I'm showing you the same thing. This is a correlated market. Okay, we've got Aussie dollar on one side of it. It's correlated with the Aussie USD market. It's correlated with the any market with Aussie in it. And what you don't know is it's somewhat correlated with the New Zealand dollar. For New Zealand, it's a very beautiful, very lovely small country, just to the east of Australia. It is the most beautiful country I've ever been in. It looks like a Southern Ocean equivalent of Ireland for physical beauty. Ireland and New Zealand, in my view, the country I'm talking about, not necessarily the cities, but they take the prize. But because this is correlated with the Aussie USD, you can take the Aussie USD signals and you can trade them in the Aussie yen or any other pair that's got the Aussie in it. Okay, so this trade up here, you've got a correlated buy signal near the bottom, but back in February. You've got a correlated buy signal at the first little consolidation, which was actually just one bar down. And then the next buy signal you got there from the Aussie USD. And if you've done a tutorial, folks, you knew the size of the bar on Wednesday was the signal to take the profit. Say thank you. Those of you who've heard me talk about biggest bar in the swing and closes near the blue line. That gives you the option and makes it valid to exit. Okay, let's keep moving. And I'm showing you more of this. This is a British pound. And at its significant low, it's not the chart low, but it's probably the volatility low. We had a TO3 plus buy signal on that grey bar, which is the key reversal bar, GBP USD. And that bar was February the 4th, Thursday. And that's what started off this big run in all of the British pound pairs. So you've had that. You could have executed that TO3 plus buy signal in any other of the British pound pairs. Pound, yen, whatever you like. Look what it gave you. 1,700 in the first move, one bar counter trend where you shouldn't have lost very much money at all. That actually went down a little bit before it started to reverse. You're long again at the failure point of that TO3 plus signal. That was actually a sell. I've got buy there, excuse me. The high of that bar was the failure point. So that high of that bar back in February the 16th was 13952. So 13957, adding your 5-tick buffer to the true high. That's the failure point. And 2 days later, the market takes that out. You're wrong and you should be long. And the same thing applies vice versa to short trades and long trades. And then the second leg, $1,900 into today. I mean, you know, it's a pretty easy $3,600, $3,700 trade, isn't it? And it's there. And you can get all that from the correlations, which I talked about with you last week, that these Forex pairs are highly correlated in direction, but not quantum. There was a nice trade. Have a look at this. This is still on the British pound USD trade. This shows you the chart I put up for members on Wednesday, and I showed them two bars. One of them was Tuesday this week, where we had what we call target recognition. This is the precursor for any trade. If you don't have target recognition, you're just in a blindfold. And the Daniel Code is the only thing I know and have ever known, and I've been doing this for over 30 years, it's the only thing I've ever known that gives you these targets in numbers. You don't need to know anything about math. If you can tell red from blue and count to 5, I can teach you exactly what I'm showing you now and more of it. So on those days, which is Tuesday of this week and Wednesday of this week, the high of this market was 14117. Have a look at that Daniel Code number beside it, 14116 in the blue line. 1 tick variance. That's less than a hair, folks. I mean, 10 ticks in this market, 20 ticks in this market, less than a hair. And look what happens the next day. You have this big run up, big pullback. What's the close? 14142. What's the Daniel Code number? 14148, 6 ticks variance. Believe it or not, markets are trying to tell us what they're doing. And this is the market's way of saying, I know these numbers and I'm tracking them. And this goes on in markets with the Daniel Code all the time, every day. And I don't think you understand that. And if you don't understand that, frankly, you're missing out on the biggest opportunity of your life. Now, they're not statements I make very often, if at all. But the trading over the years with the Daniel Code is so precise, it's so impeccable. If you know how to trade it, as I say, you'll make more money than you can ever spend in half a dozen lifetimes. And of course, what does that do? That sets up a sell signal for today. Okay? GBP USD was a blue line sell yesterday. If you were subscribed to the TO3 Plus signals, you saw that. And what's happened today? Great, straight down. And there it is. Here's today's trading. Have a look at that. So that set up a TO3 blue line and a TO3 and a blue line sell signal. Trade was elected today. Where was it elected? 5 ticks below the true low of Wednesday. And we give you that exact number in our trade program with the Daniel Code. When you put your numbers in, tick off the chart you want to trade, it will tell you what the orders are, what the entry point is, what the initial stop loss is, and whether it's correlated with other markets or not. And we do that for you every single day. If you're not using this, you're just dedicated to poverty, in my view. Can't make it any clearer than that. Now, this happens. A lot of you people have been with us for years and years and years. You've read my articles for years and years. You've seen these webinars for years and years. There's about 50 of them a year. On and on. It's always the same. Nothing changes. Think about in this time the changes there's been in markets. Think about the changes in technology. Think about high-frequency trading. Think about the sorts of things that the SEC has allowed with Robinhood. You would expect there to be a change in this system and how accurate it is, and there has never been a change. It's always this accurate. And this has been public for 13 years, some part of 13 years, most part. December 2007 we released this website, and I've been trading it for another 6, 7, 8 years before that. I mean, folks, don't know what else I can say, but you should be clamoring to learn how to trade this stuff. Okay, so the thing that we haven't talked about, because today we've been talking mainly about trading price, which is very, very important. And boy, I'm going to have to hurry up, folks, aren't I? I don't want to be too late for you. But, of course, the other hand of trading price is trading Daniel Code time signals. These are largely unknown to the world. I invented this some years ago, and have a look at it. This is UST bonds we're talking about, them having a big push down. This is a comparatively small market. The margins are roaring up. It's about $4,000 today. Because of the volatility, that's what happens. But most of the time, margin on this is a very small market. Have a look what the money is here. $5,500 on a margin of $3,500 to $4,000. I mean, anytime you can make something better than 100% on margin, you're really doing very, very well. And the biggest loss, there are two losing trades in this whole sequence. Maximum loss is around $500. Okay. Average win, 4 times average loss. Yes, there's a big trend going. There's a trend going in something almost all the time. These are the time signals, folk, on coffee. Remember I said to you commodities have been getting excited on the thought that there'll be some inflation could be coming. I don't know how they're ever going to find that out, because in the 30 years that I've been trading, no official government representative has ever understood the real level of inflation. I mean, domestic inflation, house inflation is many, many times the official figures. Anyway, have a look at this. Early on in this market, last few days of the low back in February, we had a consolidation. Consolidations are the only time with trading the Daniel Code that you will lose money. By that, I do not mean that you don't have losing trades. We have winning trades and losing trades. In fact, the strike rate in wins and losses is not terribly high, not designed to be high. As I said, I can give you a program that's got a better than 90% win rate, but it doesn't make the money. What makes the money is what you're seeing here. This is trading time. Okay, so there are even rules for avoiding some of the consolidations. The ones you don't avoid, that's the price of doing business. And look what happens if you keep doing the business. $1,800 straight up in the first of those trades. An outside bar, this is something else you should be aware of. Outside bars have a mandatory stop and reverse. Now, not all of you can do it on your platforms, but what we had there, and I'll put this cursor where you can see it, there was a sell signal below this bar, and the sell signal was elected. The market went down about $600 and something. It then reversed and stopped us out for pretty close to break even. It then went on and it took out the high of this setup bar. In other words, that's the failure point. And if it takes out that high, then your sell signal was wrong and you should be long. Look what this market's done since then. $3,100 straight up. Add the last trade onto that, 4,800 odd, thereabouts. Okay? Trading time, I teach you on all markets, for all markets, when you do a Daniel Code tutorial. Dana, I'm coming to you. If you're posting anything, folks, any questions, I'm not ignoring you. I'm just trying to get through this, and I'll come to you before this ends. Okay, there it is. We're somewhere near the end. As I told you, we've been having a bit of a commodity boom. Have a look what copper's delivered us. $16,500 in 16 trading days. 2 big winning trades, one 6,500, the other's 10,500. And what was the losing trade? Less than $500. Okay, $16,500 net pretty much since late February. It's February 23, 24, I think it was. I'll actually tell you exactly what it was. Here we are. We look up another contract. Here it is. That is going to be right there. That is February the 2nd, that time buy signal on the left-hand side of the page. Okay, straight up, 1 bar counter trend, loss less than $500, probably about $300. Failure point above that sell signal gets you long again, $10,500 into today's close. If you're not doing this, folks, the simple reason is you don't like money. And one of the great truisms about life, which you'll all be very aware of, Things cost more and more every day, don't they? Okay, if you want to learn this stuff, I'm happy to teach you. Just shoot me a email. Let me know you're interested. If you like, I'm happy to call you if you give me your phone number and a time. Remember, I'm in Queensland, Australia, the Gold Coast. Beautiful one day, perfect the next, and COVID-free, as is pretty much the whole of Australia now. I think there might have been 2 or 3 people who went into quarantine, picked up something overseas, but we've been totally free of all restrictions or anything else for months and months. Absolutely marvellous. They've done a great job. Yes, it's had a few inconveniences, but not much when you think what is the risk of not doing what responsible government should do. Anyway, that's where we are. If you want to learn all this stuff, including forecasting, everything else, I teach you everything that I know. So you can see this. It will teach you trading time, trading price, forecasting, all of that. My fee for the tutorial is $7,500 US. If that's too much for you in one hit, let me know. We'll see if we can organize terms for you. If you can put down a reasonable deposit, about half or thereabouts, I will be happy to finance you for the rest. It is your benefit that you learn Daniel Code trading, and once you've learnt it, you have that gift for life, and you can teach your children. Wonderful, wonderful opportunities. Okay. If you're subscribed, folk, to the DC Website Pro, that's a $249 a month program. Don't forget you're entitled to 2 free 6S markets if you want them. Simply let Terry know, support at thedanielcode.com, and he will get you switched on for any 2 of those markets that you want. And if you want more, you can simply subscribe for them. So we say the business of trading futures and forex is not to be right, although it seems like it. We're right most of the time. The business of trading is making money, and that's why I want to focus on this today. And I've gone a few minutes over time, and I've still got a few questions to answer. So I do hope you'll forgive me, folks. So let's go on. I was going to say, if you haven't already had a free trial of the Daniel Code, go to the website, just click on the free trial button. If you have any problems at all, contact Terry at support@thedanielcode.com. He's our webmaster and tech guy. And if you've already, at another time, you've had a free trial, the website will probably get cranky and not want to let you in. But let Terry know, and he will get you organized. Okay, so next thing to say is that this is the disclosure statement, and I do want you to take this seriously. I know everyone goes on about it. But if you don't know how to trade, for God's sake, don't risk real money trading. It's really, really easy to lose it, and lose it fast. Learn to trade. Put your effort, your financial resources, and your time into learning to trade the Daniel Code, and then you will become a safe and consistent trader. Okay, let's go. That's about all for us. Now let's go to these questions. Here we have, just came back, Colorado Springs. What should be the sell or buy protocol when a signal posted is followed by 2 inside bars? Inside bar actually is a null or a void for trading purposes. For forecasting, inside bars are absolutely vital, but for trading purposes, we treat them as a null or a void. In other words, simply carry forward the last valid signal that you had. Okay, so that's for you. Do I need, oh, this is Dana or Dana. I have 3 platforms ready. Do I need to use Trade Navigator to trade Daniel Code? You would need it for if you wanted to do a tutorial, Dana, where I teach you this stuff, and I also give you 3 of our proprietary programs which are embedded in Trade Navigator. And we then use those programs to build the Daniel Code time trading chart and the Daniel Code price trading chart, and they're very different. So that's there once you've done a tutorial. If you do a tutorial, you'll then know what the studies are that I've created, proprietary signals for the Daniel Code. once you know about them, you can create them in most platforms. So you may be talking about using Trade Navigator for a period while you do a tutorial, but you don't. Otherwise, if you're not doing a tutorial, you don't need it. I've used it for years and years. I'm a partner there, which means they give me free data, which is great. And I have found it to be a very, very good company. I've been with them for many years. Okay, so that's Dana or Dana. What have we got? Audio isn't working properly. This is Michael Stewart. He's left. Are the time signals lunar-based or DC ratio-based? Both of them. Both of them, Michael. Well, that was actually Peter Mack. Peter, the time signals, the forecasting time signals are based on the Daniel code ratios running off, amongst other things, lunar time cycles. A quick follow-up from Dana. What happened to the automated Daniel code system? Didn't seem to perform the same as manual. It performed very, very well for some people, and they got unduly excited about it. Boy, you're going back some years, aren't you? I was unhappy about that, and I'm still unhappy about automated trading systems. I think they're a recipe for disaster. And I've looked at a lot of them. In fact, that's why we took this one off. It wasn't consistent enough. It couldn't match. Now, our IT capacity is limited. You have to remember that. I'm not an IT type at all. In fact, I have very limited IT knowledge. And I guess, therefore, I'm not terribly interested in it. But we have not, with our limited availability of technology, and Terry's a very, very good-hearted guy, and he's a good IT guy. We've never been able to get the automated programs to work as well as the daily and weekly signals and what have you. Okay, so Murph, yes, time to catch up again soon. Please do shoot me an email, mate. Love to talk to you and do a tutorial anytime you like. Peter Mack, thank you, my friend. And Mark Long, we haven't seen your SPX long-term chart for a while. Can you pull it up? Dana, thank you. John Listman, thank you. Now, what have I asked for? Mark, he wants to see the S&P long-term chart. Okay, let's see what we've got. No, it's on the other computer. I'm sorry, I haven't loaded it onto this computer. It wasn't something I was covering today, Mark, but I will certainly have it at our next webinar. And if you want it sooner, shoot me an email, jneedham@thedanielcode.com, and I will email it to you, the up-to-date version. Okay, all of you, thank you for being with us today, folks. Those of you who are still with us, thank you for staying over time with me. I hope some of this has gone in. It's a funny thing. One of my clients said to me the other day, "Why do you do this? Why do you teach people to trade? You don't need the money. Why are you doing it?" And I explained to him, and it's sort of a very personal thing. My belief and understanding is the Daniel Code was revealed to me. You could never find it by simple logic. I should know. I tried long enough. And it's all mathematical. But it was revealed to me, and I feel I have an obligation to share it with those of you that are interested enough and have the right temperament to take it on. So there we are. So that's it for now. Thanks, Alan, and Mark, and Hank, and John, and Diana, and everyone else, and Peter, and I'll look forward to talking to you in a fortnight. That's 2 weeks, incidentally. Americans don't use that expression, I'm told. A fortnight is 2 weeks. We use it commonly. And if you have any particular areas you'd like me to cover in any of these webinars, shoot me an email, and I will be only too happy to oblige. Goodbye for now. Enjoy your weekend. It's been a super week's trading. I hope you've done as well as you should. If not, let me know, and we'll see if we can get you fixed up. All the best for now, folks. Bye-bye for now.